And we were just talking about gold, and we have James Anderson with us today at James Henry And on Twitter, and that's his bailiwick. James, great to have you back. I miss you. We had to skip one rotation. So,
Yeah.
buddy, welcome back. What's top of mind for you? We've had some very wild action, had a huge move in the metals to the upside, and then we had that reversal starting in Asia last a week
Right.
from last Sunday. Um, what's more important, the move that we had to the upside or this recent reversal?
I think the move to the upside, I mean, just to have a new nominal record high, some pain above 2100, to have
Yeah,
happen, in Asian hours is kind of interesting. You have to kind of question why that happened. I mean, at the time, we had the drone bombing and the military blamed the Houthis, and then Iran behind it. So it's possible that that was maybe what was going off, but it's also possible that people just saw complacency in a quick way to make a trade and make some money, and so they ganged up long on the Asian side. We'll see if that phenomenon continues in some way or form, fashion. I would assume so, because in a in a secular bull market in gold, generally the longs win, and so what used to be, and it's still there. You still have
yeah,
this Stockholm syndrome of the gold crowd, who, woe is me, I'm a victim crowd, where it's still been the best performing asset in the 21st century. If you compare it versus stock and other asset classes, it's been pretty good. But the woe is me crowd is still around, and they constantly are worried about, quote, Mr. Slammy, or whatever stupid nickname they gave that thing, where they think that the
what
shorts
do
are
they
always,
call it?
they call it
Mr.
Mr. Slammy.
Mr.
Yeah.
Slammy, James?
Yeah.
That's
It's
a good one.
it's
Yeah.
it's it's embarrassing. I can't believe in my sector we got people referring to it as like this monster. It comes out of the woodshed and beats people down. But that's
Oh
what it's
wow.
become on Twitter. So Mr.
Okay.
Slammy is what some people have been coined it. But now Mr. Slammy's starting to go upward. So it's a good thing. I think that was. I mean, that'll be a big. When you look back, that'll be something that you remember years from now. Just that overnight pop to
Yeah.
2150, and
Yeah.
yep, and
We've had major turns in Asia. I remember once I was long going into an Asian session, and gold was, I don't know, down, started going down. It was down 5, then 15, then 20, then 25, and that ended up being the low.
mhm,
It was really kind of a strange session that you can get a major turn in Asia, but it's not the first rodeo that I've
mhm,
seen happen in Asia. So
mhm.
here we are, halfway back. Even if it takes some time, I'm still bullish.
Yeah, I
I
mean, you
think
got
we
to.
could see 1900. You think
Yeah,
that's a
totally.
possibility? Huh?
It's totally a possibility, because it seems like a lot of the commodities are melting down. I mean, crude
Yeah,
oil is going
oil.
down. Yeah,
Yeah.
I mean, only copper is kind of being resilient, and gold's somewhat resilient, but it's possible to go down further. What's the 200 days of 1950? So it
Yeah.
wouldn't surprise me at all. Even like the jump to 2150 on a percentage deviation move. Like, if I look back this whole 21st century, it really wasn't that huge of a pop. I mean, the biggest deviation that's happened recently was the COVID ramp, where gold and silver kind of ran up really fast. That those are the in 2023 early, there was a big pop as well, but this recent one, it only went 5% over the 200-day moving average. So it was just a short term thing. But like I said, if it's the phenomenon of seeing the chart that high, it happening once, it'll probably happen again pretty soon. People
Yeah.
are expecting the rate cuts. At some point, the market, I
Right.
think, 80% in May is saying, and 97% in June. So pretty much everyone thinks rate cuts are coming next year. Vast majority of investment professionals are thinking that there'll be a global recession next year. So gold's going to front run that. Generally, you see gold make the move before we all know that the rate cuts are actually official. So I would expect, if it doesn't happen toward the end of this year, maybe Q1, we'll start to see a ramp beyond the 2150 zone.
Okay. The gold silver ratio, here's a daily. So, I mean, during this break, it was,
Yeah.
gold holding up much better. You looking for, I know you pay attention to this, James,
Yeah.
and you've always kind of had more of a bias that people's first purchase of physical should be, have some gold. before
Hmm.
they branch out into silver. You still feel that way?
Yeah, I totally do. Especially depending on someone's age and time span, time horizon. And the volatility in silver is just pretty wicked, and sometimes it takes longer than some people think. And a lot of people when they're first new entrants in the market, they think it's going to happen tomorrow, and I'm here to tell them no, it's not going to happen tomorrow. It'll take some time. So the gold silver ratio, obviously, it's spiked up. It's back toward 87. We'll see if it
Yeah,
comes back in a little bit, but it could bust out of there and go higher.
yeah,
And
yeah.
there's nothing saying
It's knocked at the door so many times.
right.
You would think this resistance would be weakening. I mean, look
Hmm.
how many times it did. One, two, three, four, five,
Hmm.
and it worked. But here we are again.
Right.
In probably a lot of people's surprise, because everyone's looking for the silver squeeze. So,
Yeah.
are the short squeeze in silver? Are the silver squeeze guys talking about Mister Slamming
Yeah,
to?
of course.
Huh?
Yeah, I mean that's a given in silver. But it's just funny that the gold market uses that nomenclature. Not so much the silver market. It's just there's just a lot of apathy there, which is probably for the best. Yeah, but it's this bipolar thing where all of a sudden, if the silver price starts moving, then all of a sudden it's going to the moon. So
Right.
it's black or white generally there. But the gold silver ratio that you're pointing, we got to get back towards 75. If we can break eventually, when the rate cuts start happening, we start having a real run in the gold silver ratio. That's 75 number. If we break that, then you're probably going to be on a good run for silver at
Okay.
some point. And I would expect next year, sometime first half, maybe next year, we'll kind of test that and maybe break it.
Are you showing any investor interest in platinum?
Platinum has interest. Like there are people who are interested, but it's like single digits of our customer base.
Okay.
If they're interested, they're very interested, and they've usually done a lot of research and they understand that it's a good value for the long term. But it's a very small percentage of volume overall. So I don't spend too much time talking about platinum on our channel, SD Bullion's YouTube channel. But I do
Yeah.
occasionally spend time, depending on the news, if it's important enough. But yeah, as far as the three precious metals, I would say, obviously you want to have gold as your foundation, some silver as well, depending on your time horizon and outlook, and then platinum would be a third possible precious metal owned, especially when it's half the price of gold, right?
Yeah. I mean, I think a lot of people that are in the markets today don't even know that platinum used to trade at a $1,000 premium over gold, and here we're
Right.
trading $1,000 discount.
Right. It used to be reverse, right? Platinum twice the
Right.
price of gold in 2008. So
Right.
in a commodity bull run, you could have a situation where platinum goes back to parity with gold, and that
Yeah.
that may be maybe next decade, early next decade that occurs, but it wouldn't surprise me at all to see that happen at some point down the line.
Yeah. It could be a good trade, a pairs trade, where you're long the platinum against gold if you
Hmm.
have patience
Yeah.
and
Right.
and and capital to ride out drawdowns.
Yeah, I mean,
Um,
ultimately, we're looking at a monetary situation, right? So gold and
yeah.
silver would be the first two, but platinum would be a trade on its usage in industrial
Industrial.
factors and the
Yeah.
fact that there's just a deficit running year after year, it seems. So, and the ETFs have been raided pretty thoroughly by China already. China's kind of been stocking platinum for years now, and I think they're doing similar for silver right now because China can't have a situation where they don't have either silver or platinum for their industrial base. So
Okay.
to see them raid all three of the precious metals in the last decade has not been a surprise.
Well, since you and I talked, what was a headwind for metals, this dollar rally has shifted. I
Mm-hmm.
don't think we've talked since the dollar broke.
Right.
So view on the dollar. I know you have to keep an eye on it.
Yeah.
I know you're long-term bear. Do you think
Yeah.
that this next wave is in progress here in the dollar
Yeah.
to the downside? Yeah.
I don't know if it's happening right now and maybe a little bit more strength relative in the dollar. But
Yeah.
as soon as they start rate cuts, I presume that we're starting to kick off the next major bear market for the U.S. dollar. And you could have a situation, and we've had situation for a while now where both dollar and gold go up. But ultimately, gold
Yeah.
is going to be the one that outperforms the dollar, obviously, as time goes along. So, but I mean, when you talk about all the different fiat currencies, the dollar, the Swiss franc, those are probably uh, your two flights to safety at the moment. So, the combination of the two would probably be the fiat currencies that you might hold for the short term.
I was shown a chart a couple years ago. Forgot who the guy was, but he showed a chart that every bull market in silver, like you were talking about gold,
Mhm.
could rally with a strong dollar, but
Mhm.
silver needs a bear market in the dollar to have a
Yeah,
bull run. Do
yeah.
you ascribe to that?
Yeah, that's true in terms of recent history, right? I mean, even the 70s and as well in the 2000s. I mean, secular bear market of the dollar was bullish for gold and then eventually silver, and that'll be probably the same case here. What you want to see is gold break out and make a run toward 2,500, and silver will start to strengthen, and that gold silver ratio will start to drop, and we'll get below 75 and make a run for silver and gap that gold silver ratio down into the 60s, hopefully. So yeah, that is not that is something I prescribe to for sure. You're going to need a secular bear market in the dollar for silver to really rally.
Okay, and stocks have been rallying with metals. Not
Mm-hmm.
they didn't come off like they did. I know a lot of people buy this stuff because they're afraid of financial assets. That they
Mm-hmm.
think that um, there could be, problems in a big bear market and bonds are going to be worthless. Does it bother you that there's no differentiation between what's happening in, everything goes up together
Mm-hmm.
and everything goes down together?
Mm-hmm.
Have you noticed that?
Oh
That
yeah.
it's all one market. Do you ever think we'll see differentiation where, you could have a strong market in gold and silver and other financial assets are not performing? Isn't that
Yeah.
what the long-term
Sure.
case for gold is anyway?
Sure. If you go and look at a huge like long-term chart of the gold to S&P 500 ratio, for it to be at parity 1 to 1 is pretty common. It happens a lot, and there's times where gold is far outweighs and outprices the S&P 500. So, for instance, in 2011, I believe it got down to like zero point 0.7, and right now it's S&P's more than twice the size of gold, right? So,
Yeah.
for it to get back to parity is not going to be surprising. I think pretty sure there's an analyst on Bloomberg who's constantly beating the drum. Mike, I forget his last name, but he's saying that S&P 500 could go into a major bear market back toward 3,000, and gold would be at 3,000. That's where he sees the
Oh,
coming
that's
1 to 1 parity.
that's
So it,
interesting.
yeah, I mean that would be a major shock to see the stock market down 33% at 3,000 and see gold at 3,000. But that's more or less what the large macro chart looks like when you look at it on a long term basis. It going back to 1 to 1 is something that happens a lot in history, and usually when that's occurring, gold's in a bull market and it outdoes it. It goes beyond the S&P 500. So
You know,
you
I
see it go back.
remember when I remember
You
when I
know,
was a baby in the market in the 70s
mm-hmm,
that, where I used to go work out in LA.
mm-hmm.
There were stockbrokers, and I was, commodity broker. And he was back then the Dow was, I don't know, under 1,000. I forgot what gold was then before the bull market. I think it was before the bull market that peaked in '79. But that happened.
Yeah, I mean, in
Gold,
the
yeah,
70s, it was around half to it spiked all the way down to zero point 0.2. That was like
yeah,
the just below zero point 0.2, and we're at 2 right now. So if
yeah.
we have a repeat of that, you're talking about gold outperforming the S&P 500 by tenfold, right?
Yeah,
I mean that
yeah.
I'm not saying that is exactly what's going to occur, but I will put my neck out and say it's going below what it did in 2011, which was like zero point 0.7. So to see gold
Okay,
get to 4 times the price of the S&P 500 is not something out of the question. That's something that can happen. To see it
okay.
happen 10 times the value of the S&P 500, that would be a repeat of the 1980 spike. And it's
Yeah,
possible. That's totally possible. But the issue I think is that the powers that be in the United States, they know that the vast majority of investors are stock. They're stock.
yeah,
They're really heavyweight in stock market, and so it's more or less an issue of national security to keep the stock market not only high and keep the perspective that the stock market is a great place to store your value. So they're going to do whatever they can to keep that price, that nominal number high, so people don't flee from it too quickly. So my expectation is, yeah, the guess of the meeting of parity around 3,000 is probably conservative. It's probably right, but it could take years for that to occur. So we got a
yeah.
long time, I think, still to go.
Okay. Anything happening out there geo-wise that you have your eyes on that could affect
Yeah,
values? What are you
I,
worried about?
Um, not necessarily worried, but I just think keeping your eyes on the fact that there's been huge amounts of physical gold and silver taken off of the COMEX over the last few years, pretty much since the COVID 2020 ramping and the double counting of the ETF 400 ounce bars on the gold side to give the perspective that COMEX had all this inventory. Basically,
Yeah,
what's been happening is that you have a lot of registered and unregistered piles that have been going out of the COMEX, both in silver and gold. In gold, they've almost halved. I mean, at the peak, they claimed 40 million ounces, and now it's just around 20 million ounces. And that's just a matter of what 3 years or so that's occurred. So to see the COMEX and have gold continue to fly out of its warehouse and silver, same story. And the ETFs, that's more or less what's been happening is that there's been a lot of Western ETF sellers over the last few years. And a lot of that gold that's gone out has ended up going to central banks who've been buying it at record clips. I mean, this year they're probably going to get over 1,000 tons again. And that's 2 years in a row of mega sized central bank gold buying. And they're buying 1,000 metric tons is basically like a fourth of all the new mine gold supply and refined uh, gold supply per year. So they're already admitting to taking about a fourth of annual supply. And that's just what they're admitting to. I don't know. It's possible that there's central bankers who are buying
that's
and
only what
have
we know, right? I mean, there could
exactly
be a lot, right, covertly.
completely.
Yeah, you know.
So
Go ahead,
go ahead.
James.
No, that's it. Go
No,
right. Go ahead.
all right. So a lot of people have asked me, and maybe you could answer it. I know it's not your specialty, but why have the physical markets outperformed the miners?
Yeah, that's been going on for a pretty long time, and the last handful of years or more. And there's some charts I have on my Twitter page that reflect that, and that's not just in the United States; that's around the world. That's in Australia. That's in a lot of other countries as well. Basically, the way that I've been explained by other people who've shown me charts that illustrate this, that pretty much everything went to the wayside for miners since the 2008 global financial crisis. And the argument is that hedge funds, they like to go long gold and short the gold stocks. And so you have a consistent, persistent hedge fund shorting of miners, and they also go long on the COMEX. And that combination has been deadly for people who have been long miners. And in a Kondratiev wave, which is basically the final wave of a debt supercycle that we're in, which is like the
Yeah,
winter, Kondratiev winter,
right.
basically you have physical gold. It performs much better than miners do. And if you look around the world, I mean, miners, depending on the jurisdiction, are very risky. I mean, I live in Panama. We just had 2 months of shutdowns and indigenous going crazy about the mine for copper, and they basically shut down that mine supply. So about 1.5% of global copper supply just went offline, and that mine is going to be shut down and mothballed. So if it can happen here in supposedly tranquil Panama, I would suggest it could happen almost anywhere. And so,
It's a great point. There
yeah,
is a
it's
land grab. There are land grabs by governments
yeah. I
that
mean, look at
after
the
these companies put in billions of dollars to develop their mines, they
mhm.
want them or they're taxing them a lot for them to
Yeah,
keep operating.
yeah. Like for instance, when Russia invaded Ukraine, I had it wasn't a huge amount of money, but I had some money in one of the major gold gold mines in Russia, and the United States government said, okay, you can't trade those stocks anymore, and they're going to be held by the U.S. Treasury. So I don't know when I'll ever be able to liquidate that mining
Yeah,
share. It could be years from now, but I mean that's the type of risk that you have if you're holding in a jurisdiction that gets deemed unworthy of trading by the U.S. Treasury, or if you're in a country where all of a sudden the locals use social media. That's the other thing is people don't realize how quickly things can escalate with social media. So if there are people getting angry about something, social media helps spread that anger very quickly, and all of a sudden you have a shutdown and months of not having gasoline and not having gas, and that was kind of what I lived through the last few months, and the country just was not working economically for people. and they acquiesced and shut the mine down. So that can happen anywhere. I pretty much would argue, unless you're living in a under a pure dictator regime where they use violence to the ultimate ends. But Panama's not that way. They're pretty peaceful, and they didn't want to have blood in the streets, so they acquiesced, and that mine got shut down. So to me, I what I would suggest to people who are long mines and such is only put the certain percentage that you can afford to lose or get tied up. I would suggest that you stick with majority bullion because it's already outperformed mining stocks for the last 15 years, and it probably will outperform mining stocks for another 5 to 10. Generally, like in the 70s, gold bullion and silver bullion outperformed the mining shares until after the peak. It was only until 81, 82, 83, 84, 85 that the miners outperformed bullion. And so my suggestion is we'll probably see similar, where you'll see gold and silver spike in a mania. And at that point, if you want to gamble in some mining shares, that might not be a bad time then to start playing in that market with some capital that maybe you can afford to lose and gamble with. But that's generally when they outperform bullion is after the peak.
Okay, so here's James' YouTube channel, and you know, getting some nice
Yes,
views, and he does
every week,
reviews.
every Friday, I generally will do a 10, 15-minute synopsis on what happened in the market that's really bullion related, gold or silver, but we focus on other things as well. And I try and curate what's the most important information that I kind of saw that week and distill it down into a format that doesn't take too much of your time. And I try and give you a lot of charts and data and information that's fact based, not just opinion based.
Look at this guy. You look like you should be on, I don't know, Fox.
No
Any,
thanks.
any, anyway, James, it's always great to talk to you. You want to wrap it with, do you have a comment on what's happening in China? And do you keep an eyeball on them since they are a major accumulator of gold that, if there is some kind of, you know, bad recession or I actually saw that one of their property funds actually made a payment, surprised everyone today. Evergrande or one
Mhm.
of them. Do you worry about China ever needing to liquidate some of the gold they've accumulated?
Not really, because they've been accumulating this 21st century and a lot more so after the 2008 global financial crisis. I'm pretty sure Tim Geithner went over there in 2008 on a trip, and it was an
Yeah.
official trip that he went over. And I'm pretty confident that at that point they negotiated with Geithner that we're going to get out of some of our treasuries and hedge it with gold bullion. And is that okay if we start to buy gold bullion and move out of treasuries? And I'm pretty sure Geithner gave him the green light to do so. And from there on in, China has been accumulating consistently gold from ETFs mainly and from other places as well. But they are the one, besides India, they're the largest importer in gold in the world, and they're also been the largest miner for the last dozen years or so. And when you actually back out all the data, I mean, the amount of gold that's gone in physically that we can trace using import export data and exchange data, I mean, like over 30,000 tons have gone into China, and they don't export gold physically out. It's illegal to export gold out of the country. So they are a massive hoarder of gold. A lot of it's sitting with the private citizens, but I think a good amount is undeclared yet that's sitting with their sovereign wealth fund and military and others, what have yous. Places that when they want to, that when it makes sense for them, then they can declare it officially if they so choose. They have been declaring every month on month for the last year and month or so. Consistently every month they've been declaring more official gold. And if you look at the amount of gold that they officially have been claiming to add to their official supply, it matches what Russia has basically done in the 21st century. So I think the two have been kind of coordinating to do so together in lockstep. But at some point, I think both of them are going to be more aggressive about how much official gold they really do own, because behind the scenes, I think they have more than they declare officially.
Thank you so much, James. Great to talk to you. And, uh, you're a metalhead, and I'm not talking about rock and roll. You need
Right.
to follow James and hear what his thoughts are and what he's sharing with his community, and it'll keep you on the right track. It's definitely, not hype, guy lives and breathes it. And really was great talking to you again, buddy.
Great to be with you, Dale. All the best to you, the listeners out there.
Yeah, so happy holidays, and I hope you have a great 2024, buddy. My trading warrior brother, James Anderson, everyone.
Thanks, Dale.
All right, buddy. So that's a wrap. You could join the team in 20 minutes on the Morning Edge. Don't just count your coins and bars and Bitcoin. Count your blessings, and see everyone tomorrow. Good luck with the Fed later on. Adios.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.